Hello everyone, welcome to today's session on goods and service tax filings. So today we are going to learn about the input tax credits. We will see what is input tax credit, then how to claim input tax credit in GSTR 3B return, then we will see how to match GSTR 2B with the books and the common mistakes that are generally committed at the time of filing of GSTR 3B and claiming of input tax credit. Along with this, we will see some practical examples. So before proceeding with today's session, let us quickly recap what we did in our previous session. So in our previous session, we learned about the calculation of output tax liability. That is how output tax liability is ascertained. So output tax liability is ascertained by summing up all the taxes on the outward supplies of goods or services during the reporting period plus GST on any advances received during the reporting period plus GST that is increased due to issuance of debit note less GST that has been reduced due to issuance of credit note and the RCM liability that has been paid. So this way the final output liability is ascertained. So let us now proceed with today's topic. Let us understand what is input tax credit. So input tax credit or ITC means claiming the credit for GST paid on the purchases. Such purchases can be purchase of inputs or input services or capital goods. Such input tax credits can be used to offset the final output tax liability. For example, if I have paid rupees 10,000 as GST on my purchases and I have collected rupees 18,000 from my customers as GST, then the net liability that I have to discharge in cash will be rupees 18,000 minus rupees 10,000, that is only rupees 8,000. So such availment of input tax credit helps avoid the cascading tax effect and also reduce the ultimate cost. There are certain restrictions and limitations on the availment of input tax credits, and availment of input tax credits that are specifically in the list of blocked credits cannot be claimed. So moving ahead, what are the conditions to claim input tax credits? So the basic principles to avail input tax credits is governed by section 16 subsection 1 of the GST Act. So according to this principle, the input tax credit can be claimed only by the registered taxpayer. That is, those supplier of goods or services who are registered under GST can claim the benefit of input tax credits. Then such input tax credits must accrue from the purchases or expenses that is meant for business. So any input tax credit that accrue from expenses or purchases meant for personal consumption cannot be claimed. So the input tax credits must pertain to the business or in the course of business or for the furtherance of existing business. So what are the conditions to avail input tax credit? Section 16 subsection 2 deals with the conditions to avail input tax credit. So what are the conditions? Possesses valid tax paying document, then goods or services must have been received, then taxes must have been paid to the government, then GSTR 3B must have been filed. It should not be a blocked credit as per section 17 subsection 5. Then the supplier has filed GSTR 1 and the invoice is reflecting in GSTR 2B of the buyer, and the payment has been made within 180 days to the supplier. So let us discuss each. Possesses valid tax paying document. That is, the buyer who is intending to avail the input tax credit must be in the possession of tax invoice clearly reflecting the value of supplies along with taxes paid thereon. Then goods and services must have been received. So input tax credits intended to be availed against the goods or services must have been received by the receiver. So taxes paid to government. The supplier must pay the GST amount to the government through GSTR 3B. So the next point is GSTR 3B must be filed. So the supplier must file GSTR 3B to remit the taxes to the government. Also, the buyer who is intending to avail the input tax credit must file GSTR 3B so as to claim the input tax credit. Then not a block credit. So all the inputs are not allowed to be availed. A list of goods or services against which input tax credits cannot be claimed is governed by section 17 subsection 5 and it falls under the block credit list. Next is invoice reflecting in GSTR 2B, that is, input tax credit against an invoice can be claimed only if it is reflecting in the GSTR 2B of the recipient. It is only possible that the invoice will reflect in GSTR 2B if the supplier has filed his GSTR 1 return within the due date of the reporting period. So the supplier must have filed his GSTR 1 return and considered the invoice of the recipient in his GSTR 1 return so that it reflects in the GSTR 2B of the recipient. Payment made within 180 days to the supplier. So the liability under an invoice must be settled within 180 days by the recipient. If it has not been paid within 180 days, then the input tax credit previously claimed shall be reversed by the recipient, and upon the payment of the amount against the said bill, then the recipient can reclaim the input tax credit that has been reversed. So what is the role of GSTR 2B? So what is a GSTR 2B return? It is a monthly auto drafted statement. So we have already learned about the filing of GSTR 1 return by the supplier of goods or services. So a supplier of goods or services files GSTR 1 return and declares different data in different tables. So in table 4, that is meant for declaring the B2B sales, auto-populates data in GSTR 2B of the recipient. So if the supplier of goods or services has filed his GSTR 1 return and declared the invoice in B2B segment, then it will auto-populate in the recipient's GSTR 2B. Input tax credits of those invoices which does not appear in the GSTR 2B of the recipients cannot be claimed in the reporting period. So GSTR 2B categorizes the input tax credits as eligible ITC, such ITC which are accrued from the supply of goods or services that does not fall in the list of block credits or are not ineligible due to the application of any other provisions of the Act and are not restricted in any other manner. Then ineligible ITC. There are input tax credits which falls under the list of block credits. Such input tax credits cannot be claimed. Also there are input tax credits like credits accruing from free samples or destroyed goods or goods distributed as free samples or from the goods that are lost or stolen or destroyed. Such input tax credits may appear in the GSTR 2B return, but they shall not be claimed by the recipient. Then the reverse charge ITC. So GSTR 2B return also consists of inputs that pertain to inward supplies liable to reverse charge. So reconciliation of GSTR 2B and the books ensures the safe and legitimate claims in the GSTR 3B return. Let us take an overview of GSTR 3B table, that is ITC available. So this table is divided into 4 parts. First one is ITC available, then ITC reversed, then net ITC, that is the difference between ITC available and ITC reversed, and finally the ineligible ITC. So table 4A contains input tax credits available. All the input tax credits that accrue from import of goods or services or from inward supplies that is liable to reverse charge, or from inward supplies from input service distributor, and all other input tax credits are declared under table 4A. Then comes ITC reversed. All the reversal of input tax credit as per rule 38, 42 and 43 are declared under table 4B. So the supplier of exempt goods or services cannot claim the input tax credit, or if such supplier is engaged in the supply of partially taxable goods and partially exempt goods, then proportionate reversal has to be made as per rule 42 and 43. Also, all the inputs that accrue from purchases or expenses that are personal in nature are also required to be reversed under this table. Then 4C, this table will calculate the net ITC available, that is the ITC available minus the ITC reversed during the reporting period. So this ITC the supplier will be eligible to claim during the reporting period. Next is the ineligible ITC. So this table contains data related to input tax credits reclaimed which was reversed under table 4B2 in the earlier tax period. That is, due to the non-payment to the supplier within 180 days, if certain credits were reversed during the prior period and reclaimed during the current reporting period, then it will be declared in this column. And ineligible ITC under section 16(4) and ITC restricted due to place of supply rule. So any ineligible credits other than those falling under section 17(5) are to be reported under this column. So let us take a practical example. So GST on purchase of goods rupees 1,50,000 at the rate of 18% comes to rupees 27,000. Then import of services GST amount rupees 10,000. Then reverse charge mechanism inward supplies input tax credit 5,000. Then reversal due to exempt product rupees 2,000 and blocked credit amounting to rupees 3,000. So how this will be declared in the table 4 of GSTR 3B return. In column 4A, total input tax credit will be 42,000, that is from purchases rupees 27,000, from import of services rupees 10,000 and inward supplies liable to reverse charge input tax credit is 5,000. So aggregate will be rupees 42,000 to be declared in column 4A. Then in column 4B, we have to reverse the input tax credit out of exempt supplies. So such amount is rupees 2,000. And in table 4D, that is ineligible credit, we don't have any data regarding that. So the net ITC that will be available to the taxpayer will be rupees 40,000. That is the difference of total credits available less credits reversed. So what are the common mistakes to avoid while filing of GSTR 3B return and claiming input tax credit? Claiming input tax credit that is not in GSTR 2B. So earlier it was allowed to claim your input tax credit based on the invoices available. But now it is very clear that input tax credit that are appearing in GSTR 2B can only be claimed. So such mistakes should be avoided while claiming the input tax credit, and only such credits should be availed that are there in GSTR 2B of the recipient. Claiming ineligible or blocked credits. So many times the supplier of goods does not bother about the blocked credits and claims all the input tax credit that are appearing in GSTR 2B. So the nature of credit should be classified as eligible and ineligible, and then only such credit should be claimed. Then no reversal for exempt turnover. So traders who are dealing in exempt and taxable supplies need to reverse the input tax credits that accrue from supply of exempt supplies. For example, if my turnover during the reporting period is rupees 1 lakh, out of this rupees 1 lakh I have made a supply of 70,000 towards taxable goods and rest 30,000 towards exempted supplies. So my total input tax credit during the month is rupees 10,000. Then I have to reverse the proportionate amount of input tax credit that pertains to exempt turnover. Here I have to reverse the 70% of the input tax credit that is from exempt turnover. Next, missing 180-day rule. So input tax credits availed on bills that are unpaid for a period of 180 days or more are required to be reversed and can be reclaimed upon the final payment of such bills. So this rule must be taken into consideration while claiming the input tax credits. Then poor documentation and non-reconciliation of books and the GSTR 2B. This leads to claiming of ineligible input tax credits. So what are the best practices? Reconcile 2B with purchase ledger. It is always advisable and it is the best practice to keep a reconciliation always ready before claiming the input tax credit in GSTR 3B return. So GSTR 2B must be matched with the purchase register and the books of accounts. Then maintain supporting documents. All the purchase invoices must be preserved properly. Then use correct classification in GSTR 3B. So eligible and ineligible inputs must be properly classified in GSTR 3B, and against only the eligible input tax credits, the credits can be availed. Then monitor 180-day vendor payment condition. So the books of accounts must keep the vendor's ledger updated and the 180-day rule must be properly adhered to. So to conclude, ITC reduces cash outflow. Claim it accurately using GSTR 2B, and table 4 of GSTR 3B is a crucial data. So ITC reduces cash outflow. So the ultimate tax liability, that is the output tax liability, is reduced upon the claiming of input tax credits and only net amount is required to be paid in cash. Then claim it accurately using GSTR 2B. So input tax credits must be claimed only for those invoices that are appearing in GSTR 2B. Then table 4 of GSTR 3B is crucial as it contains data related to input tax credit. So that's it for today's session. Thank you.